Hi, my name is Deon Rebello, and this is the Bullion Vault. Hi, Willem, how are you doing?
Good and you, Deon.
Very good, thanks. So, we are into the month of March, and we are now into the third month of the year. I thought for this episode we'd have a little bit of a look just to review where gold, silver, and platinum have been over the last couple of weeks, and then just also to have an idea what the trajectory or what the outlook is going forward.
Yeah, gold has been on a rampage already. I mean, the beginning of March, and I mean, it started the year at 2,620 odd dollars, and it's already sitting at $2,920, and that is after a pullback. Um, so yeah, it's been on a rampage. It's up 11% since the start of the year. It's been absolutely crazy already, and I think there's a lot more to come from it this year.
Yeah, and again, I think gold, there was a little bit, as you say, a bit of a pullback where it had dipped quite nicely. And again, I thought, sure, and this was in fact yesterday, where it was sitting around $2,800, just about $2,880 an ounce. And I kind of thought, sure, this is a very good buying opportunity. Would we look at at falling further? And then this morning, wake up and it's back to the 2009 mid 900s.
Yeah, I mean, it was, I think, literally about 2 days ago when it started its little dip. Now, of course, that's due to Trump's tariffs coming into effect. And I'm not exactly sure why that's pushing gold down, but obviously it strengthened the dollar and that drove gold down a little bit. But I mean, as we said, it's a little dip, and I was reading an article literally, what's it, a day or two ago that said don't panic, just buy the dip. It's as simple as that.
And again, I think what's very important here is we are in uncertain times. We are in a world where the biggest superpower, being the US, has got a new government in place. And what's interesting is even now, this last week, with the happenings or the events at the Oval Office, you had the Ukraine's president sitting there between the president and vice president and getting big fat carrots. And subsequently, the US has pulled out military support for Ukraine and so on. So again, this is a president who's going to walk his talk and talk his walk. And it's clear that he's got an agenda and he's got an idea of how he needs to sort America out. But the rest of the world kind of like almost fumbles after these tidal waves of decisions that are coming through.
Yeah, I think it's just a case of most of the time we can't believe what's happening. And yeah, for better or worse, we've got a man in charge who's doing things his way, as you said, doing strange things, and I think shocking the world most of the time. So yeah, this is something that we're just going to have to ride out, and what it does is it creates uncertainty. I mean, what's going to happen with the war now? I mean, I already see that they are ready to have the next round of talks already, but we don't know what's going to happen there. We don't know what's going to happen in Europe. It's all of this uncertainty that is just coming from everywhere right now, and once again, uncertainty drives people to gold.
Absolutely. You talk about that also, but I think with the kind of leadership style of a guy like Donald Trump, is it's very polarizing. It creates complete opposites. And I mean, you get actors standing up on stage at the Oscars, and I won't use the actual defamatory word, F Trump, like to the world, and Robert De Niro then walks off the stage. So he either has people loving him or people hating him. And of course, he's also got a number of people that are in his corner, the likes of Elon Musk, who we raised is a South African, but he's very much one of the forefront global business leaders. And I think with their whole campaign of the Dodge, where they want to make the state departments more accountable from a business sense makes a lot of sense to me. But again, I think the kind of style that Elon through Trump is not going to really get people's backs up. They're going to get the people's backs up because they're not going to feel supported. So again, there was a talk show host that Elon was on, old Joe Rogan, and now they're saying, that the Trump attempted hit was a CNN created event. And again, those kind of things just creates more polarization, and again, that creates more instability.
Yeah, I mean, it's a circus. I don't think there's any other word for it. It is an absolute circus right now. And yes, if you look at the stuff that they're trying to do, if you look at Doge and all of those things, trying to hold people accountable and all of that, the idea, the fundamental idea behind it is good and it's valid and it's something that should be done. However, the way they're going about it, it's like saying I need to mow the lawn, but I'm going to use dynamite. It's not going to work.
I like that
It's
analogy.
but and that's the thing. It's a case of there are ideas that are valid, and it's just that the way they're going about everything just makes no sense to me, and I don't think they're going about it in a way that makes sense to a lot of people.
Again, as I said, it's very polarizing and very fractious. It causes people to not want to work with it. They almost push back against it, and again, you see the U.S. economy, the U.S. media houses, and there's clear lines. I mean, we've always known this, that there are certain stations that are pro Dem and pro Republican, and again, that's U.S. politics. But the bottom line is very simple, that it has created instability. Again, there was an article I was reading the other day where we are still ticking towards a recession within the US. And this for me is probably more concerning, is it's not making headlines. But all the economic indicators are already indicating very clearly, and the likes of Warren Buffett already came through earlier this week saying we are concerned. Also, hence the investment buying of gold has also tripled up because there's this uncertainty and this anticipation we are going into a recession. The markets are overvalued severely. Now we need to get out of this.
Yeah, and I mean, central banks has already started buying gold again. I mean, if we just look at 2025 so far, Poland and India has added 3 ton to their reserves. We've got some of the so-called, emerging economies like China, Kazakhstan, Uzbekistan. They were the top 3 buyers so far this year. There's been 18 tons bought so far just in this year, and that's a clear indicator that reserve banks are resuming their buying. There was a little bit of a pause towards sort of just before the end of last year, but now they 100% resuming buying, and it's a clear indication that people are flocking towards the safe haven. They are trying to get that safe haven that gold offers them. And yeah, it's interesting speaking about central banks and gold reserves and everything, because once again we've got the circus in town, and Doge and Elon and Trump has announced that they want to do an audit of Fort Knox. Now, as you know, Fort Knox is where most of America's gold reserves are held. So I can see why an audit is necessary, because they're sitting with 147 odd million ounces of gold in Fort Knox. And in the Treasury's sort of ledger, those are valued at $42 an ounce. That's 1970s prices, $42.22 an ounce that is valued as. And that accounts for, I think, $11 billion.
Okay, so let's just put this into real context now. So if you said how many ounces?
It's 147.3 million.
Million ounces at $40 per ounce, or just over. Yeah,
$42.22
an
an
ounce.
ounce.
So now if we actually had to really value it at current pricing, what would that actually equate to?
We would probably be looking at 430 odd billion dollars.
So what's interesting is, I mean, the states, as far as reserves, sits about, just as you mentioned, over 8,000 tons of gold. The next one in line of the volume of gold they're holding is Germany, and they're coming in at about 3,350 kilograms of gold. China, who was the biggest accruer of gold last year from a Reserve Bank perspective, is only sitting on just over 2,600 tons of gold. So you can see, even though this gold rush or this bull market was definitely stimulated by the buying from China, but as you mentioned, the likes of Poland, which I find quite interesting, and India have always been quite reliable on their accumulation of gold. But a lot of smaller players like Kazakhstan and Uzbekistan and things like that, it's interesting that countries that are not necessarily the biggest ones are also accruing gold. But again, it speaks to exactly what I was saying earlier about recession, problem on the horizon. A US not being aligned to the whole Ukraine and Russia thing. Now, the US is clearly not taking the side of Ukraine, and that's going to have a problem. That's going to have a problem on global politics. The US is kind of going to its partners, being mainly the Western countries, with mainly in Europe, and saying, no, we will not listen to you. We'll decide on who we want to be friends with.
Yeah, it's once again geopolitical tension, one of the biggest drivers of the gold price. And now with this reevaluation of the gold at Fort Knox, realistically, let's face it, it's not going to do anything, but the market sees it differently. With this revaluation happening, there's a lot of speculation that the price of gold is going to skyrocket because suddenly there's this extra value that's been created. I mean, it's been sitting there for since I think the 1930s or something, or
Yeah.
whenever it was first brought in there. But suddenly now, because the price is being revaluated and being adjusted, there's perceived value. And there are speculations that that's going to drive the gold price up even further.
Well, what I find quite interesting is this, is we've got this whole change of stance from the US from a geopolitical perspective. Where they were a firm supporter of the Ukraine side within the Russian-Ukraine war. And again, Trump comes along and he has always shown an allegiance or an alliance towards Putin. I mean, it's documented through the years that there has always been a relationship there that goes beyond politics. That said, as I mentioned, and this is what's interesting, is the alarm bells are going off for a recession. How do you stimulate an economy? How do you start to drive things? Create a war. It's simple to create a war because that will stimulate that growth, and you'll start to get more income coming into that country because a war requires all those things, those weapons of mass destruction being missiles and so on. So it's kind of interesting that we know from the one side, economically or geo-economically, the world's in trouble. We know Europe, there's a lot of issues there. We know even within South Africa, across the board, even into China, there are issues economically as far as what the economies are being stimulated, what they're receiving, and so on. And here we go. The US is now in that position. It's clear that the US economy is spluttering and they're on the brink of a major recession.
And I think it's not going, though the momentum towards that recession is not going to stop. If anything, it's going to get worse because, as you know, Trump's now introduced his tariffs on Canada, on Mexico, on China, and instead of everybody going, okay, well, how do we fix this? How do we appease you, oh great Lord? They're saying, no, you know what? If you're putting tariffs on us, we're putting tariffs on you. Screw you. We don't want your stuff. Instead of buying from you, we'll buy from Mexico. We'll buy from China. We'll buy from whoever. And I think that's not quite playing out as they expected.
Well, I do understand the fundamentals of what Trump's trying to achieve. He's trying to stimulate the American economy. So ultimately, what he's trying to do is any foreign company that an American company would be competing on price now suddenly has a 25% tariff against their pricing. So automatically, it's going to favor the local. It makes sense in a textbook, but in real life, it's a different thing. If you consider that most of the American companies outsource their goods because of their wage gaps and all those kind of things, the cost to produce and manufacture in the US, in the Western world, is very, very high.
That's true, and the biggest problem is there's this ideal, and the ideal is, as the man himself would say, it's beautiful, you know. So there's this ideal, and the problem is the ideal isn't feasible most of the time. You can't simply say, I'm going to slap 25% on this and everybody's going to buy American now. Because, as you said, parts are being imported, materials are being imported. A lot of companies that manufacture stuff in America import components for the stuff that they manufacture. It's not like everything there is made in America, and it's not like we can flip a switch and say, okay, now we're going to make it in America and instead of importing it, because facilities don't exist, talent doesn't exist, manpower doesn't exist. And this is the problem. It's not as easy as simply saying, okay, well, we're going to manufacture it in America now, because that's going to cost trillions and trillions of dollars to build the facilities, to train the people, to get that manpower to actually staff that facility and start producing. And it's going to take years. And by that time, I mean, well, that's already way too late.
And you raise something very clear here is over time, where America previously, probably 50 odd years ago, you look at the likes of Detroit and that, which were major automotive hubs where they were manufacturing thousands of cars on a daily basis, and those whole industries have literally whittled down. And as you're saying, I think the ideal is good, or the intention's good, yet to actually go and replicate and rebuild those facilities, reman them, get all the technical know-how, get the people into to run those facilities. Again, I talk of costs. And so it's not a clear-cut thing. It's a great ideal. I think it's been poorly executed. And again, that's my opinion, which whatever that amounts for. But again, it's the leadership style we're getting right now, which is shoot, then ask questions.
Yeah, no, I mean, you look at something. What's the most American thing? One of the most American things you can think of, an iPhone. Apple, one of the biggest companies in the world, so American. Yet their products aren't being made in America, and there's no way that you can suddenly take that and start manufacturing that product in America. There's no facility. There's no workforce for it, and I think that's where they're missing the trick. You know, the idea behind it, solid ideas, but it's sort of like they read this in a textbook somewhere about this is how it's supposed to work, and they went in, they just applied it across the board with no thought about the actual practicality behind it.
Yeah. So, okay, we've discussed gold. We're sitting on 2,900, just over 2,915 as we speak. Um, when we discussed originally at the beginning of the year, our forecast, we did say it would touch 3,000. Anticipation for me personally was within the Northern Hemisphere summer, which leads to my next point is if the price are already hitting close to $3,000 based on the instability and uncertainty that's been created both geopolitically and economically within the states and across the world. But the states play such a big part of this is we work towards the European summer, which we're now a couple of months out from. And then again, we're going to start to see prices ramp up. Generally, if you look through the years, from probably about July through to September, you have a big pickup in the price of gold. So the question is this: are we going to break 3,000 before June in your mind? And if so, where do you see the ceiling being hit by probably July, September?
I think probably we're going to break that 3,000 by June. Um, as I said, they're doing the review or revaluation of the gold at Fort Knox now, and we'll see that many experts do say that that's going to actually be a driving force for the gold price. And I mean, you can bet it's going to be an absolute TV circus when they do that, because they want to do a live stream of the audit. And but yeah, that's what we've come to expect. So still, I do think that's going to drive the price, and that might be the thing that drives us past that 3,000.
Okay. So for the next quarter, so we talk from April through to June, being the next quarter, my prediction is I actually think we're going to hit 3,000 far sooner. So I think probably around April, we'll see that first break in of 3,000. And then I do believe there'll be a retraction, some profit taking as we always do expect, probably around 2,800 odd, which is going to be a very good opportunity to buy. And then I think we'll get that next push through come June, July into August. And then I think we could even see the heights of probably about $3,300 an ounce.
Yeah, I was also thinking around 3,200, 3,300, which is up quite significantly from when we started this year, which is only 2 months ago. It's crazy to think about it. But yeah, as you said, we're going to see pullbacks. It's the natural cycle of it. People start selling off, there's profit taking, gold pulls back. And the thing is, don't panic, just buy the dip.
Yes, famous last words. Any retraction is an opportunity to buy. And across the world, especially in these times, and we'll reiterate it again, that these are opportunities to definitely look to buy. Even now, at $2,900 an ounce, if you'd said to me a year ago that there'd be fair value in that price, I would say you're out of your mind. And yet, right now, it is. Right now, based on where we see it running to this year, the likelihood is we could even by the end of the year see the heights of $3,500. Again, the world that's painted around that is also my concern because economically there's going to be some big things, especially with a recession, an imminent recession happening. And then, secondly, the whole geopolitical thing, especially with regards to war.
It's not looking good across the board. It's as simple as that. There's tension all around, political and economical tension. And, at this stage, I think the only thing we can really do is sit back and watch. um, so yeah, it's. I think gold still has a lot of legs. It's gonna continue to grow. How far? I mean, just looking at the past 2 years, what it's done, I'm not gonna say anything is impossible.
Yeah, and again, I think any any market commentator in this space, if they can say with certainty that they know the price, I cannot believe that they are also not taking a guess at it. I think there's good factors around that you can make an educated guess and say, will the price go up? It's more likely to go up versus down right now based on the global scenarios that are painted both geopolitically and economically. So that's a given. So the trend is definitely an upward trend. Is it stopping? Hell no. In fact, it's accelerating. And I had a client again saying to me, "Oh, they would like to sell some of their bullion because they're battling." And my first response was, "Do you understand that the difference in $100 on each of your ounces of gold has a massive knock-on effect to the value you'll ultimately receive?" So our recommendation was hold tight, see if you can maintain whatever you can, get rid of other investments personally, any rand based or currency based investments. Rather utilize that wealth than actually something that is growing at such a good rate right now.
Yeah, definitely. And I think let's just reiterate, we are not licensed financial advisors. This is not 100% financial advice. Do your own due diligence, do your own research, make your own decision. We're not telling you what to do or what's going to happen with certainty. But I mean, yeah, saying with certainty this is going to happen, it's impossible. Nobody has a crystal ball to predict the future. The people that do is, that's insider trading, that's manipulation, etc., etc., which is illegal. People go to jail for it. So yeah, nobody really knows for certain what it's. I mean, JP Morgan, one of the biggest financial institutions in the world, had to revise their projected gold price. Even they don't know. It's, so, but we can follow the trends. We can look at what's happening. We can put the puzzle pieces together and come up with a picture of what we expect to happen. And I think that's just what we're doing. That's what we're trying to do here, is paint this picture what's going to happen. We see the pieces. We're trying to put the puzzle pieces together, and what we get from the picture we get from that puzzle at this moment is the bears are in control. Sorry, the bulls are in control, not the bears, not the bears.
No, this is definitely a bear. It's definitely a bull market,
Yeah,
not a bear
yeah,
market. And like I said, I think just even taking a step back, and I'll reiterate what I said earlier, is the trend based on the factors around the economics, the global geopolitical uncertainty, favor a stronger gold price going forward, at least for the near future. But that's, as we said, a recession is not a quick event. It's been building up. This recession has been building up since 2018, where we started to see the ideas of something happening, where we could see certain markets or certain indicators were already overvalued. The S&P 500 has shown unbelievable growth over this period of time. And again, that is a barometer of the US economy. Yes, it is weighted, and they use certain factors that will then determine the pricing, but it is a good understanding of where the American market is.
yeah, definitely. And the thing that I think you also need to remember, it's all paper. The American market, the stock market, it's all paper. Bullion is physical, it's real. You can go, you can look at it, you can touch it. And that's where the value lies in bullion. That's why it has endured for so long. While so many fiat currencies have spluttered and failed, have come and gone, the average lifespan is 30 years, I think. While gold has been used as currency for 3,000 years, since the beginning of trade, gold has been used as a currency.
I think on gold, we will definitely continue through the series at the Bullion Vault. We will relook at it. I think again we'll probably do another relook around June just to see what we're saying now, where we've gone. I do believe that we will see over $3,000 at that point. In fact, I do believe it might even be a tad higher, close to 3,300. That said, I definitely want to still get silver in on this episode. So we're looking at silver. The price right now is $32 an ounce. It's also been very strong. It's been very strong in its hold. There's been very little drops. If they've been very minimal, and it's just literally rebounded and carried on where it's going.
It's just quite odd for silver because, usually it's all over the place. It's up, it's down, it's $30, it's $18. And yeah, silver has actually been more stable than we used to over the past over the past few months now. And it's holding strong at $32 round about there. Um, yeah, the thing is silver follows gold. So whatever gold is doing, we'll probably see that reflected in silver a little bit later. And if gold is on the rise, we're going to see a rise in the silver price. And once again, silver is more than just an investment. It is an actual industrial metal. It is used in electronics, solar panels, electric vehicles, you name it. Silver is probably involved somewhere in the production. And that's the difference between silver and gold. Silver is 100% industrial. It has actual uses. I mean, it's the second most useful commodity in the world. And so I think with all of the boom in tech and a move towards the green movement, the sustainable energy, etc., silver plays a massive part in it. And we've seen, I think, a deficit of silver over the past few years now.
Yeah, again, I mean, we look at the photovoltaic market, it's still running at an all-time high. Silver has been running at an 11-year high where 1.5 billion ounces have grown over that period of time. And it's not slowing down. We've spoken about it before with the photovoltaic market, the solar panels. That's running at about a 20% per annum growth. The biggest markets being China and India, but we see across the world, in every country, even in our own country, you see the growth in solar panels has been on a continual move upwards.
Definitely, and this demand keeps growing, and I think if we look at the gold silver ratio, silver is so undervalued right now. We it certainly has a lot of room for growth, and I don't think we're going to see a drop in the silver price anytime soon. I think it's going to remain stable at least, and I really do think that there is still room for it to grow.
Well, current gold silver ratio as we speak, we're looking at about 92 to 1. So for 92 ounces of silver to 1 ounce of gold, it is severely undervalued based on that ratio. Generally, that ratio to make any sense in actual real monetary terms or in where it's shown its actual real value is around 30 to 1, 40 to 1 on the high side. The fact that it's literally at 92 to 1 tells me there's still massive, massive growth. And again, we did speak about it when we spoke about the silver on that podcast, where we spoke of the growth of silver and we spoke about the actual growth in that market. That we've hit nowhere have we come close to hitting any peak whatsoever. The fact that the markets are, from an industrial perspective, are still requiring silver. The EV sector, your electric vehicles, and definitely also, as I mentioned, the photovoltaic market.
Yeah, it's two massive, massive markets that is just growing in leaps and bounds at the moment, and both of them require vast amounts of silver. And we're seeing this growth all around the world. We're seeing car manufacturers that, you know, have previously said never in our existence. Ferrari is building an EV. You've got China, all the companies in China building electric vehicles. It's no longer confined to one or two manufacturers. This is becoming the norm. And photovoltaic solar panels, it's becoming the norm. There's such a growth in it, and all of that just demands silver, and the demand for silver is just growing. It's skyrocketing, and we're going to see, I think, the silver price definitely take an absolute ride on that and maintain strength.
Okay, so prediction time for silver. So we're looking, as I mentioned, 32, just over $32 an ounce. Where do you see it over this next quarter that we're moving into?
I don't think there's going to be a lot of movement. 33 maybe, $33 an ounce. Long term, I wouldn't be surprised if it touched 35 this year.
Again, I think for me, that continually deficit that it's running on per annum, where the supply outstrips or the demand outstrips the supply more specifically. For me, that leads to the price at some point going and taking a fair jump. We did see that jump from the mid 20s to this new position that it's been. I do foresee that we should have some testing again. If we look trend wise, we go into the northern hemisphere summer. There is generally that same movement that we'll get. It generally is a little bit more lagged, as you mentioned that traditionally silver always is slow to start and then it catches up and surpasses gold in actual growth percentage. So I do believe that we should see silver starting to ramp up. I'd like to believe that we could start to see in the high 30s a dollar per ounce, and I do believe that we will have some testing at some point at 40, and then we'll probably see that retrace, and then again that new baseline is created in the mid 30s.
Yeah, it's just there's so much going on at the moment, you know. What it's really going to do is just about anybody's guess, but I think we can, with a reasonable amount of certainty, say it's going to keep rising.
Absolutely. And we've outlined it today and we've said it a number of times. The conditions allow for both commodities and platinum, but we don't have time today for platinum. We'll definitely do a review on that in the near future in one of the next podcasts. But that's running at a far slower rate than gold and silver. And again, I think the important thing here is if there's uncertainty, it's clear from a reserve bank perspective, from a financial institution perspective, they all going towards precious metals and gold to negate some of these losses. And again, I mean, the man in the street, for us, this is as important as being a reserve bank to mitigate some of the losses that we would experience in currency devaluations and so on. This is where precious metals will navigate you through these uncertain times.
Definitely. I mean, we could go on for hours, but unfortunately, we have to stop at some point. And I think this is a very good point. It's simple. Your precious metals is on a ride of their lives at the moment, and I think it's going to continue to grow. So if you do have gold, hold on to it. Don't sell it right now. I think it's got more to go. If you see the gold going down, don't panic. Just buy the dip. And yeah, I think that pretty much sums it up for right now.
Willem, just in closing, if anyone is watching our podcast, what do they need to do?
If you enjoyed the episode, hit the like button. If you haven't done so already, consider subscribing, and we'll see you guys in the next video.
Bye for now. Take care. Thanks, Willem.